What happens if you can't pay your policy premium? What are my options? My name is Sean King, Infinite Banking Specialist, and today I'm going to break down exactly what your options are if you get into a pinch. So let's get into it. Look, life happens. Maybe you're in a tight financial spot, maybe business is slow, or maybe you're dealing with unexpected expenses. The great news, you've got options. And I want to start by saying this, you guys. The first thing you should do is talk to your infinite banking coach. You're literally never bothering us. This is what we're here for. Life changes for better, for worse. And we know that's going to happen. We're real people. It happens to us too. The worst thing that you can do is stress in silence. The best thing is to reach out, because infinite banking is flexible and there are solutions to help you guys. So today we're going to walk through some temporary fixes and some long-term solutions to keep your policy working for you. Now, some of these may be better than others, but let's go ahead and dive in and find out what your options are. So the first step is to talk to your IBC coach. Listen, you guys, infinite banking is a long-term wealth building strategy. We all know that. It's not just another bill. The last thing we want is for you to feel stuck with your policy. If you're experiencing that financial squeeze, realize you do have options, and your IBC coach is your best resource. We can help you find short-term cash flow solutions to keep your policy active. We can also help you understand how to use your policy to your advantage. We know the fine print, you guys. Every insurance company has different flexibility options that you might not even know about because you're really just a client. It's not your job. So before making any big decisions, let's explore those solutions together, and I know that we'll be able to figure out whatever best works for you. Now let's break it down into two different categories of solutions. Number one, temporary solutions. These are if you just need that kind of like short-term fix. Number two is going to be permanent options. This is for the person that no longer wants to contribute to their policy or is even possibly thinking about cashing it out and getting rid of it. So let's start with temporary fixes. Maybe you just need a little bit of breathing room. If that's the case, here are some short-term strategies that can definitely help you out. Option one, switch the mode of premium deposits. If you're paying annually, maybe switch it to semi-annually or quarterly, maybe even monthly. So why this might be helpful? Well, instead of making one big payment, you spread it out and you make more manageable payments. So instead of paying $12,000 a year up front, you pay $1,000 a month. Option two is to reduce the minimum premium. If you've been aggressively funding your policy like we teach people to, you can drop down the minimum required payment for a while. This typically covers the base premium, any term insurance riders, and the minimum required paid up additions, which is normally about $10 a month. Quick example, if you're paying $12,000 a year, like I said, well, depending on how your policy is structured, let's say 60% to the paid up additions and 40% to the base. Well, if you don't have any term on your policy, then your base is going to be $4,800. That's the required amount that you pay. But if you want to keep your paid up additions rider on there, you're going to tack on an extra $10 a month or $120 a year. So the minimum that you need to pay to keep your policy in force would be $4,920. That's that $4,800 base plus that $120 paid up addition rider. All right, now let me explain how doing something like this could help. So of course it keeps your policy in force without straining your budget. And it gives you the ability to ramp back up your contributions when your cash flow starts to improve. All right, so option number three is going to be to use a policy loan to pay the premium. If you've built up cash value, you can literally just borrow against your policy to pay the premium. It's your bank. You can use it however you need it. This helps you in a couple different ways. Number one, it keeps your policy active without requiring outside cash flow, and you still maintain full control over your policy repayment schedule. Now, some insurance companies automatically do this if you have enough cash value, so definitely check in with your IBC coach about that. Option number four, use the dividend to pay the premium. Now, normally this works a little bit better if you've had your policy for a little while and your dividend has had some time to grow larger and larger, but there's a couple different ways that you can do this. Essentially, you can just elect to have them cover some or all of your premium with your dividend. Now, we wouldn't suggest this for the purposes of being your own banker, of course, but it's a far better option than just surrendering your policy. And it can always be changed back once you get back on track. So you might be asking, well, how exactly is this helpful? Well, like I said before, depending on the size of your dividend, you could get to keep your policy growing without taking any money out of your pocket. That could be huge for whatever your situation calls for. Number 2, you still benefit from tax-free growth and constant compounding. All right, option number 5, last option here, you let it lapse and you reinstate it later. This is a last resort option. If you absolutely cannot make a payment, you might have the option to let your policy lapse and reinstate it later. This is going to be risky for a couple reasons. Number 1, if you try and just reinstate it after a short period of time, there's a good chance that you'll actually need to pay missed premiums, interest, and some fees. There's also a chance that you might need to prove insurability again, meaning another medical exam. So if something happened to you between now and then, or maybe you got sick while you had the policy and you no longer qualify, you're going to be in a tight spot. Once reinstated, the policy also goes back into that 2-year contestability period, which means the company can legally make changes if they find something false or inaccurate in your policy contract, like you lying about your age or something like that. At the end of the day, this is literally your last resort. I'd probably ask a family member for money or another IBC user for a loan before I let my policy lapse. That's how important these things are. All right, so let's get into the permanent solutions, meaning you no longer want to fund your policy or you want to know what happens if you get rid of it. So if you're looking for a permanent way to stop making payments, here are your options. Option number 1 is to reduce the death benefit to lower your premiums. So if your policy allows, you can actually lower your death benefit to reduce your future premiums. This is going to help you in a couple ways. Of course, it keeps your policy active. Number 2, it makes payments more affordable because the death benefit is lower, which means the cost of insurance is lower. Number 3, it allows you to keep growing your cash value. Option number 2 is a reduced paid up or RPU status, which converts your policy into a paid up status, meaning no more premiums are required. What happens next, Sean? Well, you keep a reduced death benefit for the rest of your policy's life. No more policy loans or cash value growth or dividends or anything cool like that. It's literally irreversible, so you can't go back later. But I would say this is probably the best option if you want to keep some life insurance but stop paying completely. Now, option number 3 would be to sell your life insurance policy. It's called a life settlement. Yes, this is a real thing. If you no longer need your policy, you can sell it to a third party. Here's basically how it works. If you had no loans, you might get more than your cash value is actually worth. But if you have loans, the offer is probably going to be based on the net cash value. There are literally commercials on TV for people who will buy your policy now, but always reach out to your infinite banking coach beforehand. A couple things to consider if you decide to do this. Will you need insurance in the future? Probably. Are there tax implications for the payout? Definitely could be, but this is definitely going to be the best option if you need cash right now and you really just don't need the policy anymore. All right, so the last option number 4, is just surrender the policy. You can cancel the policy and you can take the cash surrender value. A couple downsides here: you lose all the benefits, no more insurance, no more access to cash value, no more dividends, no more constant compounding, no more money printing machine, all that good stuff. Surrender fees could apply, reducing your overall payout. You may owe taxes on the cash value if there were capital gains, meaning more than you put in. And then obviously this is best where if you're truly just like, hey, I don't want the policy, I just want to get the cash out, I'm done. Listen, you guys, infinite banking is designed to be flexible. If you ever feel stuck, remember that you have options. Always reach out before making any major decisions. Don't say, hey guys, I did this. No. Reach out beforehand. If you're struggling with premium payments, book a call with your coach, you guys, whether it's me or somebody else. Let's figure out a solution that keeps your policy working for you. As always, guys, the information is free, but the knowledge is priceless. Be sure to check out some of our other awesome videos on the channel, and I'll catch you guys next time.